Happy New Year and welcome to this market and economic update. In this video, we'll discuss the major events and themes that shaped 2025 and what they mean for investors moving forward. Last year was historically strong for markets, delivering healthy returns across multiple asset classes, despite significant uncertainty along the way. What's the key lesson? Staying disciplined and focused on long-term goals remains the best approach during periods of volatility. Let's start by looking at how different markets performed in 2025. US stocks had an impressive year. The S&P 500 gained 17.9%, including dividends, and reached 39 new all-time highs, which you can see on this chart. Bonds also delivered solid results. The Bloomberg US Aggregate Bond Index gained 7.3%, its best showing since 2020. International markets were standout performers. Both developed and emerging markets gained over 30% in US dollar terms. This outperformance was aided by the US dollar's decline of about 9% throughout the year. Other assets saw big moves as well. Gold rallied 64%, while Bitcoin experienced volatility, declining about 6.5%. After reaching highs above $125,000 in October. Now let's discuss the major events that moved markets in 2025. Many of last year's developments were what we might call known unknowns, or uncertainties investors could anticipate even if the exact outcomes weren't clear. This distinction matters because being prepared for potential events can help investors avoid being caught off guard. Tariff concerns topped the list. When President Trump announced significant tariffs on April 2nd, markets corrected sharply. However, a 90-day pause announcement sparked a quick recovery, showing how markets can adapt once uncertainty resolves. Other events around AI, Fed policy, Washington fiscal policy, and more all led to uncertainty and market swings. So, three important themes emerged from last year's events. First, artificial intelligence influence on markets continued to grow. The Magnificent Seven stocks now represent about 1/3 of the S&P 500's value. This concentration means most investors have significant exposure to these companies, whether they realize it or not. Second, tariff policy created uncertainty, but had less economic impact than many feared. Companies adapted, policies were adjusted, and consumer spending remained resilient. The policy changes don't always produce obvious or immediate effects on the economy or markets. Third, diversification across asset classes proved valuable. International stocks outperformed US markets, bonds delivered strong returns, and gold had a record year. The bottom line is this: 2025 reinforces the importance of maintaining investment discipline. We hope you found these insights helpful. If you would like to learn more about any of these topics or discuss how they relate to your specific situation, please don't hesitate to reach out. We look forward to speaking with you.